welcome to another episode on AB Crypto Talk. On this particular video, I want to share with you reasons you have not made money trading crypto. All right, we all know that crypto is the new thing now. It's what is happening. It's the new money, and everybody wants to be a part of it. People from different professions, they want to get involved in the crypto industry. I'm talking about the likes of doctors, lawyers, lecturers, professors, and even bankers. They want to be a part of it. They don't want to be left behind. All right, but there's something I've noticed about this new set of persons coming into the crypto industry. They tend to ask a particular kind of question, which is what coin to buy? How do I know the coin to buy? I've bought this coin, when will I take profit? And whenever I hear something like this, I just know that this person is coming into the crypto industry to trade. They want to make money. They want to do crypto trading. So that is why I've taken my time in making this video, especially for those that want to trade and those that have been trading, yet you have not been getting your expected results. You have not been seeing money. You tend to trade, but you are losing money. You know how to do your analysis, you know how to buy, you know how to sell, you know when to take profit, but you just find out that you are not making money. So I suggest you sit and watch this video till the end. And as you are watching this video, do ensure you like and share this video for others to see. The first thing is this: you lack the ability to manage your risk. Okay, I'm talking about risk management. You are just ignorant of the word risk management, or let's say you have heard about it, you know how to do it, but the question is this: do you apply it on every single trade that you take? I guess you don't. Okay, so there are 4 things that you should ask yourself each time before you place a trade, before you enter a particular trade. Ask yourself this question. The first here is this: what is your risk per trade? You need to know this. Secondly, you need to ask yourself, what is your position size? What position size are you going to take on this particular trade? You need to know these things. Okay, ask yourself again, if this particular trade is going as expected, when do I exit this particular trade? When do I take profit? When do I sell and make money? That is your profit target. And also ask yourself the last question: if this trade is going against my prediction, when do I exit? At loss. Okay, that is your stop loss. These are 4 things you really need to ask yourself each time before you place a particular trade. You need to know these things. And mind you, do not say that risk stop loss is risk management, because I've heard many people saying that I bought this coin, I placed my stop loss. No, stop loss is not risk management, and it can never be risk management. Stop loss is just under risk management. So you need to know all other things concerning risk management. Okay, so the second on my list here is you lack patience, and you tend to FOMO a lot. You are not just patient, you are impatient. Okay, you don't have the patience to wait for a good entry. You don't have the patience to wait for your particular targets to be reached. You don't have the patience. One thing you need to know is this: the market is kind of designed to always give you an entry. Okay, so whenever a particular coin is pumping, do not chase it. Do not FOMO. Okay, FOMO here is fear of missing out. When you see a coin pumping, you say, "Oh, I'm going to miss out on this coin. Let me enter this particular coin." No, you can't be chasing a moving train. You can't do that. You are going to get burnt. You are going to hurt yourself. So the best thing is for you to wait, either for a pullback, either for a retracement, and you see that there's a bullish sign again, then you can enter. These are the things you need to know, okay? And these are the things you need to do, all right? And also, you don't want to be catching a falling knife. You see the price of a coin dropping drastically, falling, and you are saying, "I want to buy the dip, I want to buy the dip, I want to buy the dip." Come on, it's not every time you buy the dip. You have to analyze the market before you buy the dip, or you tend to use be greedy when others are fearful, stuff like that. Man, you are going to lose your money. Okay, those things comes with experience. Buy the dip comes with experience. Be fearful when others are greedy. Be greedy when others are fearful. Those things comes with experience. Okay, you need to have the experience. You need to have the intelligence. You need to have that knowledge before you can apply those words and those things on your chart. All right. So one thing you need to know is this: you can never get the very bottom of a particular coin, and you can never get the very top of a particular coin. Okay, it is very, very impossible, and it's very, very difficult. I don't know if you can, but it's very, very difficult. What I mean is this: if you buy a particular coin at $10, the coin might also get to $8, or it can also fall to $9 or $8 before going upward. Okay, and if you sell that particular coin at $50, the coin can still get to $200, because the market is not controlled by you. The market do not give a shit concerning you. Okay, the market is the market, and the market is always right. You just need to know this. You need to play your game safely. Do not worry that the price is still going on. All you are worried about is that I have set my target, I have gotten my profit. That's all. That is your thing. Do not be greedy. Good at cutting your winners short and letting your losers run, which is wrong. I've noticed this on new traders. They tend to say, okay, this coin is pumping, I've made 3%, I've made 4%, I've made 5%, and all they do is they sell. They say, I've taken a profit, because they don't have a plan. They don't know when to actually exit the market. Okay, they just, okay, this coin is pumping, it has made me some money, they will just exit just like that. But they are good at allowing a losing trade to run. Okay, when they see a trade falling, they see a price going against their direction, what they do is this: they tend to widen their stop loss, which is wrong. How can you be widening your stop loss? Technically, you have said that you are going to exit this market at this particular point. Then why are you widening your stop loss? You are hoping for a miracle that the crypto is very volatile, and before you know it, the coin can just turn around and begin the upward movement. But you are seeing that technically this coin is going down. You have done your analysis. You are seeing that, man, this is a wrong trade. This coin is going down. All you just have to do is to exit that particular trade. Okay, all you just need to do is do not widen your stop loss. Allow the trade to hit the initial stop loss that you have set for it. Do not widen your stop loss. Okay, when you see a losing trade, okay, be fast to exit that particular trade. Okay, so let's say you have bought a particular coin, then the trend changes immediately. All you just need to do, you have noticed that this trend have changes. You have noticed that this trend have changed. What you need to do is to exit that particular market. Okay, because you don't want to be right. Actually, you just don't want to be right. You just want to make money trading. That is the truth. So leave the aspect of I want to be right, I said it and that's how it is. No, you just need to play the game. The market is the market. You have to follow what the market is showing you. So the best thing for you to do is this: cut your losses short and allow your winners to run. Okay, that is why you see some persons will tell you that I bought this coin at $1 and the coin is at $100 and I'm still holding. Okay, but you see some persons will tell you that I bought this coin at $100 and the coin is now at $1, I'm still holding. Why? It's because they are thinking that the coin will just turn around all of a sudden and go stuff like that. No, it is not done. It is actually wrong. With these, you tend to lose a lot of money. You are not keeping a proper trading record. Okay, I'm talking about trading journals. Because if you are a trader, you have to have a journal, a trading journal. What I mean is this: trading is like a business, and in all business, they tend to have a record of the goods they have in stock. Okay, and Igbo man would not tell you that this is my shop and this is my shop. He doesn't know what is inside the shop, or he doesn't know the things he bought last week. No, it's not done. He has all the records. Okay, the goods he have sold, the goods he brought in, the one that is even coming, he has the record of everything. So as a trader, you have to have a proper, you need to keep a proper trading journal or a record. You can get a sheet of paper and be writing all your trades, okay, but you just have to have it. One of the reasons why you need a trading journal is this: because you tend to record the most successful trade that you have taken, the trading strategy or pattern that have given you the most loss. You need to record those things so that you will know the kind of trading setup you will not go into, and also the kind of trading setup that you should be using frequently. Okay, when I said trading setup that you should be using frequently, are those setup that have given you your best wins, those setup that tends to do well for you. Those are the ones you tend to focus on. Okay, so you need to know the kind of pattern, the chart pattern that works for you, that you have understand that you say, okay, whenever I see this chart pattern, I'm going to use this chart patterns. Okay, you need to know your mistake. There are sometimes you make mistake while trading. You just need to jot down those mistakes. That, oh, today 10th of April I made so and so mistake. I should have waited for this thing. I should have waited for 4 hours candle to close, or a daily candle to close, but I was impatient enough. I entered and look at the results. You need to know this thing, because when you tend to jot down your records, your mistake, you learn from them. You will not make those mistakes again. All right? You do not have a strategy. You just say, okay, this particular coin, I think I like this coin. You just enter the particular market. No. Why would you like a particular coin? Why? No, you don't need to like a particular coin. You need to enter market with reasons, not with your not with sentiment, or like how will I put it? Not with like you just see a particular coin and you say you want to enter. No, you have to have a technical reason before you enter a particular coin. Either you have a fundamental reason of entry that particular coin, or you have a technical reason of how entry that particular coin. That is why you need a plan. How can you say you are a trader, you don't have a plan? If I may ask now, what is your plan? You need to ask yourself, what is my plan? You don't have a plan. All you just need to do is you enter a particular trade, you exit. When there's a retracement, you tend to jump out, but you forget the fact that price tends to move in an up and down movement, like in a zigzag form. Okay, it doesn't just go up like this, it tends to go like this. You need to have a plan so that you know that, okay, this is my trading style, this is when I'm supposed to be trading. When these I'm seeing the patterns like this or something like this, I should not be in the market at this particular time. These are things you really need to know. Okay, have you forgotten the saying that said, plan your trade and trade your plan? Because you have to plan your trade, then you have to trade that plan. Okay, that is how you tend to overcome these things of saying I know how to trade, but I'm not making money. There are some little mistakes that you are doing which are wrong. Okay, so with this I have come with the first part of this particular video, and if this video was helpful to you, do not forget to like and share this particular video.